SOFI update here on the 18th. So let's go over the moving averages first. Like I said in the last video, we need to get above the 200 DMA, and I want to see a close above it. We got a close on Tuesday and Wednesday, and then today we got up here to 808 and we finished below the 200 DMA. So that's actually short-term bearish, considering we have the 20 and the 50 down here. But I don't think it's necessarily the worst case scenario. We were already overextended. We went all the way from 6.14, basically up $2, up 33% in like a little bit over a week. So it's not the worst case scenario to pull back into earnings, even though we are below the 200 DMA. It's still possible that this is a first wave, and I would say it's actually more likely it's a first wave. But we do need IWM. Pull that up. We do need IWM to make its fifth wave higher for us to go higher, I think. So, like I said in the last video, third wave, pull back for a fourth wave. We do not want to cross back into 209.77. That would likely invalidate this being 5 waves. So we need something like that, and then a fifth wave higher, and then SOFI can make a bigger move higher. Again, this is actually short of what I would say would be the fib length for this move higher. We only hit the 0.5 fib. So I think that there's a very good chance that this is a first wave. If it's not a first wave and we invalidate and somehow break below this, which is very, very unlikely, then it's just an invalidation. Like I said, the minimum target is still 860. Here on the 6-hour time frame, we have 6-hour demand here at around $7. So if this turns out to be a first wave and a second wave, you can see the 0.5 fib is also right around $7. So we fall down to $7 going into earnings. I'd be super bullish, because that means we're falling into demand, into earnings, which earnings are usually a beat, and we keep on growing. So I think that would be a very good scenario if we fall back down here to $7 into earnings. We could pop all the way up here to 960 after earnings, pull back, and maybe even go up here to 10 or $11. So not the worst thing that it fell below the 200 DMA, but it might be short-term bearish. We'll have to see how it goes. Earnings are in a few weeks. So really, that's all I'm going to update here today. Short-term bearish, but if we reclaim the 200 DMA, we could head up to 860 as well. Still, we did not hit the minimum target for the C wave, so I am leaning towards this being a first wave. Potentially, this pullback could be a fourth wave too. So if we do something like this, where's it at? If we do something like this into earnings, then I would be pretty bearish, to be honest. We'd be super overextended right into a gap fill, hitting the minimum target. But if we do this into earnings, I'd be pretty bullish for a move higher. So it really depends on what happens from here on out going into earnings. But I don't think a pullback here to $7 is the worst case scenario. This would just be overextended. We'd be looking for a pullback after earnings. So that is pretty much it for this video. Watch the 200 DMA, the 20, and the 50. Let's see what happens tomorrow, and we'll see where it goes heading into earnings and figure out what the most likely scenario is from there. So that's it. Have a good night. Like, subscribe for more updates, and I will catch you in the next video.